Hello guys, welcome back to my channel. I know you guys are surprised. Oh, I thought you're done for the day. Well, yeah, I'm done for the day on my challenge account. Actually, I have other accounts, but this account is where I have small money here. This is XNX. So yeah, this is my account. As you can see, it's a real account. So I have like $91 here, and I came back because I pretty much saw some good volume and setup coming into the market, and I decided to go live before I start executing trades on this one. And yeah, so that's the irony of life. We were bullish, they came down, they stopped us out. For the guys that was around in my previous stream, which was today, our stop loss was here, the last trade we took, and the market came down, stopped us out, and started reversing, right? And initially I had an open order here before now, but around this area here, but the market just came, tapped into it, but didn't trigger our entry and started going up. But that's not bad. Well, the market is really expanding. Not bad, but let's see if we're going to get a pullback. So if we can get a pullback, that would be nice. I would love to enter this trade, but I'll enter not at the level it is now. I'll pretty much have to wait for a pullback. That is if they decide to give us a pullback, but if they give us a pullback, surely I will participate in this market. I will surely participate. And so this is what I'm looking at here. And I can explain further for you guys. I know now some people will be wondering what is this guy doing. I will explain, but now I'm explaining to myself, but I believe anybody that will come across this video maybe some months from now or years from now will pretty much understand what I'm trying to do here. Okay, so the thing is, as you saw, the market came down at this level. We started creating some level of resistance. You can see that we were dropping wicks at the bottom part here. Let me even look at the left before I start jumping on this. Let me see if there is any reasonable support that we can see the market saw and started moving back up. So let's look at the left. Bro, the market is really down. The market is really down, I must say. So I'm trying to look at the left to see. Oh wow. Okay, let's go to the higher time frame. Let's go to the 1 hour and see what's going on. Okay, so this is where the market is reacting from, and if you look, this is a breaker. The previous breaker on the 1 hour, that's where the market is reacting from. That's where it's reacting from, which is not bad. But here on the 1 hour, we have to be careful. There is a look at this. Wait, let me get this out. Look at this. from here to here. The market might face some resistance here, but this is almost a double bottom here. But let's see. This is the 1 hour anyway, so I don't trade the 1 hour, I trade the 5 minutes. I use the 5 minutes. Okay, let's see if we're going to get a pullback. This is what I'm looking out for. I'm going to move this slightly below because of the fact, for slippage. I don't want them to stop us out because of broker slippage and all of that. But no need. I'll just keep it here. Right? So this is a 7.1. I am using a 91 and I want to risk 1% of that account. So this is my standard loss size, 0.01. It's already on 0.01, so I have to open a pending order. I'm buying, right? Yes, I am buying. So this is a buy, pending order. This is my entry point here, so I'm entering at this level. I'll copy the price, paste it right in here, and I will copy the stop loss and paste right in the stop loss zone. Then my TP, I will be targeting this level at the top here, this place here. This will be my TP, right? So this is my TP right there. Well, I'll leave the TP open. I like to leave it open because I intend to take partials when the market starts going up. So this is my TP1 right here. My TP1. Alright, let me confirm the buy. So if the market is coming down, it will trigger us in. Right, so this is what I'm looking out for, and I will explain again. Market came down, right? We came here, faced some level of resistance. We created, first of all, we came back here, pulled back, created an internal structural high here, came back down, was not able to get the continuation. Now we set the internal high that was created, and while the market was creating that, if you pay attention, if we should pay attention to the market build up here, you will see imbalance was created here. You can call it a fair value gap, or you can call it an imbalance around this area. Very small, it's a very tiny one there, right? That's a very tiny one there, and we have another tiny one just above it also here. All right, so we can decide to draw it together because they are just close to each other, so there is no need separating them, right? So we have an imbalance line around here. Which is going to be some extra protection for us if the market decides to give us that pullback. And let's see if the market is going to actually give us the pullback. If it doesn't give us the pullback, then I guess nothing happens. Then, right? So this is what I'm looking out for. I explained already why I am executing at this point. So let's see. We have this order flow that came right here. This was the order flow we saw last before the market started breaking out of it, right? So that's why I came back to do this live stream. Initially in the morning, early hours of today, I was bullish, and if you guys joined me in the live streaming I had earlier today, although that didn't play out, this was the level we had a buy order at this order flow here, and our stop loss was here. Our stop loss was at this level here. Let me make it a red line so you guys will see it clearly, right? So this was at the level I had my stop loss on the first trial of entering long on Euro USD. But you see what the market did? It came down with this engulfing candle in here, broke us out. It broke us out. Instead of having a continuation going down, we could see that we faced some level of resistance at this level here. Let me remove this drawing so you guys will see. You see how the market came here? It was holding this level so strong. We came down here, created a bottom wick. We tried it again, created a bottom wick, but this time around we flipped. Immediately after flipping, the fair value gap with this bigger green candle here, which came up again to add some extra fair value gap also, which is this line, this rectangle line you saw that I drew out here. Right? So with that, you saw that the market decides to get more volume and started breaking out from the internal high that was created here. That red line, you see it right there. So with that, we could see that we saw a chalk here, a change of character, a change in the delivery and the market delivery at this point. And since we saw that, we decided to get on and ride the trend going up. You get? But before that, remember, but I wouldn't advise anybody to chase the market. Don't chase the market, rather you let the market come to you, right? So what you could do is set your order at the most likely place that the market will pull back to. So once the market pulls back to that level, we'll have more confidence and more momentum pushing back up. But it's not in every situation that you would have to see a pullback. There are times the market will just go up and just start going up without having a pullback, right? But ideally, if we get a pullback, that's when it becomes more interesting, because now you would have more players entering the market, right? I'll give you an example of a pullback. If you look at the order flow we have here that brought us down, this was the order flow that broke us out, that turned us bearish, and here is the pullback. Let me remove this drawing. You see that slight green candle that came up, that's considered as a pullback that came into that order flow here, and the market decided to sell off. So that's what we are anticipating at this point here also. So let's see if we are going to get a pullback. Our pullback will be looking at something like this. This was the low. We'll get something of this nature, then pull back into this area, maybe tap into this fair value gap we'll have here, then the market will decide to start going up, right? So this is what I'm speculating, but this is just a speculation, right? I already have an open order on that, as you guys saw, a pending order, I mean to say. So this is the pending order, right? And mind you, this is a small account. I have like $91 here. This is not my challenge account, and in my morning streaming section I was actually trading on my challenge account, but this time around I'm not doing that. And reason why I'm not doing that is because of the fact that I don't want to incur further loss on that account. Okay, but on this account I've not traded with this account for a while, so I decided to execute this trade on this account. So let's see if we're going to get the pullback. That would be nice if we do, but if we don't, it's still fine. we'll just delete our pending order. All right, so yeah, maybe I'll be here for a few minutes. The market is going to do, and in the meantime, I would just have to focus the market and see what it's going to do. And I pretty much welcome to whom it may concern that is following me up on this live stream, right? And if you love what we do here, remember to like the video, share with your friends, use the comment sections to get the channel interactive. And another thing you could do to encourage us is subscribe and turn on the notification bell so that whenever we go live on this live streamings, you get notifications on that. And yeah, let's come here and share knowledge together and pretty much make money for ourselves, right? Everybody wants to be self-employed. This is a career path that can offer you that. So if you want to be self-employed, you don't want to answer to anybody, you want to be your own boss, you want to be your own everything. If you can do Forex, yeah, I will advise you to stick to that. But if you can't, don't indulge in something you can't sustain. That's what I can say. All right. Okay, so let's see what's going to happen going forward. I'll make this red, or maybe make it green. Let me see if I make it green. Does it look better? Okay, maybe it does. So these are TP1, guys. We're a little bit overextended right now. We are a little bit overextended right now, but let's see. I think we still have some slight opening. But if the market closes above our TP, that means this our entry here won't be valid anymore. We'll just have to close this entry and look for another opportunity in the market. Just so you guys are wondering what am I talking about, look at it here. I have a pending order, just like you guys are seeing here on the drawing. But let's see how that plays out. But I think there is a lot more volume in the market, and I don't think they would want to come back down. You know, when I mean come back down, I mean like pull back. I'm not talking about them going to flip and start going bearish. The market is still bullish. Even in the morning, I was bullish before now, but they stopped me out. You know, so for the guys that joined me in my earlier stream, because there was a stream I had before this one. My initial order was around this, something like around here. It was around something like this. I had something like this, and I was targeting this level at the top here, right? But you saw what the market did. It came down. Let me bring out my part. The market moved down. You saw this movement down. Came down here, stopped me out here because my stop loss was at this level. Now it stopped me out. As you can see, the market is now retracing back up again, right? But we'll see what happens. The second entry, or not the second entry, rather this entry we have here, I explained why I have the entry here, but I can go all over it again just for educational purpose, right? So why did I enter here, or why did I place my order here? Because we've not entered. The market has not triggered our order yet. But why am I planning to enter here? Reason being that the market came down, as you guys saw. It came down to this level. If you have a peek, if you have a look from the 1 hour time frame, you will see that at this level the market bottomed at. It's a breaker. It's a breaker that broke out from a bear market on the 1 hour time frame. What you're looking at now on my screen is 5-minute time frame. I trade with 5-minute time frame, right? So due to the fact that's a breaker, we expect a substantial amount of bounce from it, which you guys are already seeing, right? But since we have that there, we have this order flow here, which was the last bear movement we saw before the market started breaking out. If I should remove this drawing so you guys will see it clearly, you see the market came down here. This is the first bottom, pull back up into this fair value here, right? It pulled back into it, created an internal high, not the external high, an internal high here, coming back down to continue going down. You saw how they rejected it quickly with these two candles here. The first red one rejected it with a wick. The second one rejected it with a wick. Immediately after that rejection, the market created another imbalance here with this red green candle right here. This one that my mouse is hovering on, right? So we have the imbalance there. Created it. Initially I had my order in that imbalance to tap into it, but the market came down, didn't tap into it, right, and decided to go up. So since the market started going up, what I did was, let me bring back down my order flow. What I did was, this is the order flow, right? What I did was I placed my order at the first quarter of it, right? The 1 quarter of it, which is at this level. As you guys can see, I added my pending order at that point with the plan or hope that the market will pull back into it. This is what I'm talking about. I was planning on this when the market came at this level. I was planning that or I was speculating that the market will pull back into this, then continue going up. This was the plan, but you know what it is? The market will only show us what it wants to do, not what we want. So it's not all about what we want, it's all about what the market wants to do. So our own job as the trader that is trading on the market is to align. You have to align. You don't have to force the market to give you what the market doesn't have. You have to align yourself to what the market is doing. So that's the only way to survive in this game. Because most times humans, and when I'm talking, I'm also talking to myself, because there are times I fall prey to those things. We human, we impose a lot. We impose a lot to the things that we can't control, right? What are the things you can control in the market? You can control your analysis, you can control your market execution, you can control your risk, but you can't control what the market is doing. Trust me, you can't. Right? So what you need to do, or what you should learn as a trader, and I'm saying this because I'm still a junior trader. I don't consider myself as a pro trader. Trust me, I'm not. I'm still learning. That's the whole essence of this channel. I created this channel because I want, as I'm learning, I will put it out there so other guys that are still learning can still, come to the channel and gain one or two knowledge from, my own humble experience, right? So that's the whole essence of this channel. So let me get back to what I'm saying. So it's all about aligning yourself. And in this situation, we are aligning ourselves to what the market is doing. So there is a point the market will reach. If it invalidates our entry point, it doesn't make sense for us to still keep the entry point there, hoping that the market will still come to that level. No. To be quite frank with you, if I should see another good order flow set up at the top here, then this whole setup is no more valid. It only makes sense that we now have to get a new setup that will suit the market condition, right? And the reason why I'm saying this is because if you pay attention to what the market is doing here, because I trade solemnly or wholly, I trade fully on market on technical analysis, right? So if you should pay attention, you will see that the market is creating imbalances while it's going up. This one, another one is here, right? Another one is here, another one is here. That's a lot of imbalance for us to wait for the market to come down, because if the market decides to start pulling back down, it might pull back down to this first imbalance and continue going up, or it might pull back to this second one and continue going up, or maybe it might pull back to even this third one here and start going up. Whereas initially, when the market was at this level, we were speculating that the market will use this imbalance as a support to move higher, and that was why we added our buy limit here. And another reason why we added our buy limit there is because the market was still close to the order flow that brought the momentum that started breaking the market up. But as you may have it, as you guys can see, the market did not give us a substantial pullback. There was not enough pullback for that. So it doesn't make sense that we'll just have to be stubborn and we'll leave our trade there and wait. The market must come back there, and once the market comes back there, it's going to pull back. No. You just have to react to what the market is doing, right? So why I'm saying this is because I'm about to close my trade here, and trust me, I might close the trade and the market will come to that level, and and we were right. But there's no need to feel bad about it. You won't get it all right in the market. And at the same time, while I'm saying this, I also want to let you guys know that this is not gambling, because I know some people think this is gambling. This is not gambling. There is actually a you can put it as a science behind it. There are people that trade fundamental strategy. There are people that trade on technical strategy. Me, I use technical. I myself, I use technical. That's why when the market is printing or the price action is printing its charts on the chart, right? I use my drawings. That's why you see me drawing out all these things. It's not like I'm doing them. It's not like I'm drawing out all these, other flows because I just want to draw them out. I'm drawing them out because that's what I'm using, to analyze the market, right? So trust me, this is not gambling, because some people will feel like this is gambling. This is not gambling. This is if it's gambling, then trust me, the banks will not engage in this. And do you know who are the big players in the forex market? They are banks, financial institutes. So if this is gambling, trust me, they will not be playing this game. They will not be playing this game. Right? So, yeah, that's it, guys. I just wanted to give you guys an update on what's going on in the market. So the market has started breaking out from our TP. So it doesn't make sense that we still have it, because why would you still have it? The market, you can see, is already extended. So at this point, I'm going to close my pending order on that. And see it, I'm closing it right now. I've closed it. So there's no need, having it open anymore. But as you guys can see, this was the setup we wanted. So I'll just have to delete all these things because they are not valid anymore. They're not valid anymore. At least in my opinion, or in my own analysis, they are not valid anymore. Now we have to wait again to see what the market is going to do. Right? So yeah. Well, I think I will leave these fair values open because I would want to see how the market is going to be reacting when it starts pulling back down. I'll have to draw them out. These are fair values anyway. So if you don't know what I'm talking about, or you're a bit lost, I would advise you to, make your own research around it. Or maybe what I can do is I might bring out time to make videos on imbalances and fair value gaps. But it's something that I know that there are lots of video out there on YouTube that you can actually use to learn, right? That's how I learn too. I watch videos on YouTube. I don't have a physical mentor. Well, I have mentors, but I don't have a physical mentor. I don't have a physical mentor. See? You see how the market is reacting when it broke out from our TP. You see, the market is extended. It's just so extended. Well, I feel bad about it because if the market tapped into our entry point when we were at this level, this would have been nice. Look at that move. This would have been nice. This would have been nice. Let me see if I can get it up. Okay, this is it here. Do you see this buy here? Okay, no. This is my. I'm trying to see if I can get to, the deleted pending orders, but I don't think you can see them. But okay, I just wanted to show you guys that I tried here. I tried to enter at this point here, this fair value gap here. So if I should show, let me show you guys. Let me zoom in. Let me delete this guy for now. Do you see this red candle here? When the market created this imbalance, I had my order here, just above this imbalance, but the market did not enter it well. You see, the market just touched the line. That didn't trigger our order. Assuming that triggered our order, by now we'll be smiling to the bank, because from that level, this is the level here. Pay attention. This is the level. This is the red candle, right? Assuming we got triggered at this point, look at this. And this was our target. This was our TP1. So when we missed this target, well, the ideal thing is to start chasing the market. I won't advise anybody to chase the market. It's not part of my strategy. I know some people's strategy might allow that, but in my strategy, I don't chase the market. It doesn't make sense for me, right? I'd rather put my pending order and wait for the market to come to me and trigger it. When I use market order to enter the market is when the market is way below my entry point. Then I can use the market order to quickly get into the market and pretty much get a very good entry point where I will make good rewards from it, right? So with that said, this is a patient game. It's a very, very patient game. You really, really need to give it time. Do you know how the lioness do their hunting? They just don't enter into the forex and start chasing animals up and down. No, they will get the target, right? Set up in a good location where they will dock, and while they dock, they will wait for the perfect timing to attack. So that's basically it. And one thing about forex, yes, there is a technical part of it, there is a fundamental part of it, but there is still a psychological part of it. That's where the patience, the timing, and all of those things, comes into play. And people are different. There are people that are good in swing trading, and there are people that are good in scalping. Well, I would consider myself as an intraday trader, but in a swingish way. But I trade with the lower time frame because I want to get into the market quickly and get out of the market as quick as I can, right? So that's that about that. Okay, so with that said, let's see what the market is going to do here. I think we might face some little bit of resistance at this point, because there are other flows that brought us back down here. This was the other flow we saw last that switched us to get this pull back down here. So we might face some resistance here or not. I don't know. This is me speculating. I'm not telling you what the market is going to do. I'm just speculating. The market will do what it wants to do. So our own is to observe, right? Another thing you should learn as a trader is you should be able to determine what direction the market is going, right? That's another thing you need to have up in your sleeve. So if you're able to determine where the market is going, that's one. Then if you're able to determine where the market is going, then you should now have to plan your trade in a way that you attack the market from a standpoint that will give you a much more risk to reward ratio and a much more conducive entry point, right? So for example, assuming we chased this market, let's say we chased this market. I'm not advising anybody to chase the market, but let's just assume that we chased this market. At the point I tried to enter here and the market left me at this point. Maybe when the market printed this green candle here, I would have entered here. And if I entered here, trust me, I will still make profit because I still have some profits, right? But the reason why you will not chase the market is because you have to consider one thing. What if the market goes against you? What if the market did not make this move? That means you are now risking a lot more because you are entering at a point that exposes you more to damages. I don't know if you get my point. So it's best bet that you get a good entry or don't get any entry at all. Either you get a good entry or you don't get any entry at all. That's my own opinion. I know some people might think otherwise. For a scalper might think otherwise, because a scalper can scalp 2 or 3 candles. A scalper can enter in this candle and leave at this candle here. But I'm not. I don't. In my opinion, that's not. It's not aligned to my kind of person. That's why I say there is still a psychological part of things in trading, right? So yeah, I just want to, I just felt like giving out this information. And I know some people might be wondering, what is this guy saying? Well, to be honest, I know a lot of people that will pay to get random, tips here and there. You get? So I'm not saying this from a standpoint where I'm forming, I'm the professional trader. I've built up $1,000 to $1 million. No. This is my humble self telling you guys what I experienced in my own little time in the Forex ecosystem, right? I know there are professional traders that will look at what I'm saying and they will see that this guy is still a novice. Yeah, to be honest, I don't know. But I'm telling you guys what I know. And the more I'm in the market and the more I'm executing trades, the more I'm learning, right? So if you meet me maybe 2 years down the line from now, I'm sure that it won't be the same guy with the same knowledge and the same capacity, right? So far, I am focused. So far, I'm still trading. And so far, I am putting in the work. Of course, you will see changes. And that's one thing I would advise everybody that wants to be a trader to do, right? So, yeah. Why I'm saying this is because currently I'm not seeing a good setup in the market, so I'm taking my time here to pretty much give you guys some tips, And if you love what we are doing here, the only way you can encourage us is pretty much like the video, subscribe to the channel, turn on the notification bell, because we do this live streaming every weekdays from Monday to Friday, right? But we don't have a certain time that we come online, so it makes sense that you should turn on the notification bell, so whenever we go live, you get the notification, right? Sorry guys, I'm having this itchy throat. So yeah guys, so that's that about that. I'm currently, this is my arguably this is 6 months of my me considering myself as a full-time trader. I'm actually a software engineer. Yeah, I'm a software engineer, but I write JavaScript and all of that, but this is not why I'm here. I'm basically saying this because I left my software engineering. I won't say I left the career fully, because I still have some side project that I do every now and then, but I'm more invested in Forex trading. And the reason is because it's just something that, feels good to me. It's something that I know if I bring out time and if I learn it properly, yeah, I'm going to be good at it. And I can see the result. Frankly speaking, I can see the result. I actually started a funded next challenge. I started a funded next challenge on a 15K account. The first one I failed it. Yeah, I'm not going to stay and tell you guys. Yeah, I failed the first attempt and I had to reset the account. So when I did the first challenge, it took me 1 month to make $600, like in profit, right? Before I lost the account, or I lost the challenge. I had to reset it. But this time around, I reset. That was a week ago. Under 1 week, I was able to make 500. So there is a difference, right? There is a difference. It shows that there is improvement. And I'm not saying this as coming off as being proud, but yeah, I could say it. And there are new rules I added to my rule book, which I shared in my first live streaming video. I think not like I think I'm good with the technicals. Yeah, I can look at the chart and tell you, okay, the chart is going up or the chart is going down or the chart is consolidating and stuff like that. But one thing I figured out I did not pay attention to was my risk management. That was one thing I figured out I did not pay much attention to. So that's why I had to handle that. And the moment I handled that, I could see the results coming out. Right? Only this week, I'm up 500. I could have been, I could have had more, I could have made more profit, but the point here is that there is an improvement. And once you see an improvement, you work on that. While maintaining that, success rate, you now make adjustment and work on that. And that's why I am hammering on risk management. Every trader says that. Trust me, if you go to YouTube and watch all, the professional traders or the YouTubers that trade, you hear them say that a lot. But I don't think nobody will really tell you how to manage this risk that we're talking about. Well, it differs from individuals to individual, right? But one thing I can tell you is that if you want to execute a trade and you don't know the amount that you stand to lose if that trade doesn't go well, I will advise you to not take that trade. I'm telling you, that's my own opinion. It's an advice. It's not like I'm not telling you what to do, right? It's just my own opinion. In order to back up what I said, what I'm just trying to say is that go to your Google or go to your search engine. I don't know why I'm saying Google, but Google is like the most popular. But I know there are is it DuckDuckGo? Just go to your search engine, right? And search for position size calculator. When I did my own search, the one I was referred to is baby pips, right? Yeah, baby pips. So they will pretty much ask you a couple of, to provide some information, things like, okay, what's the balance in your account, which you will put here. So what risk percent do you want to risk? You put that also. Then they'll ask you, what's the stop loss? Your stop loss in pips, right? Your stop loss in pips for the novice or the new guys that don't know what it is. You see this red part? That's the stop loss side, right? Do you see where we have 17.8? That is the number in pips. That's the number in pips, right? So you just put in that here. Once you put that, they will ask you what currency pair do you want to trade. I pick Euro USD. The measure pairs, and when I mean the measure pairs, I'm talking about the British pound, the euro, the Australian dollar USD, the New Zealand dollar USD. Any of those measure pairs against USD, they use the same formula. So if I should calculate for Euro USD for now, let's calculate this. Okay, let's say I want to risk 10 pips. I'm giving you guys an example, right? You see, it did the calculation. It will tell you the amount you want to risk, the position size in units. I use standard lot. It will give you the standard lot size you will use to execute that trade. Let's switch this thing now to British pound. You will see it will still be the same results. So if I click on this now, I've clicked on it, you see nothing changed. It's the same formula. If I click on AUD USD, you see nothing changed. It's the same formula. So yeah, I just leave it in Euro USD, because what I trade, I trade only British pound and euro. Sometimes I trade Australian dollar, but I don't trade Australian dollar much during London sessions and New York sessions. I will advise you to trade them maybe during Asian sections. They perform better during Asian section, right? So with that said, yeah, that's pretty much how I get to manage my risk. And do you know what that helps you to do is, when you know how much you are risking for a trade, then you can now see that you can now actually plan your trade and manage your your portfolio, your account balance properly, right? So that's it. That's just it. It's not more than that. But the most important thing, or rather the first thing I will advise anybody that wants to be a trader to do, is first of all, understand the market. How do you understand the market? Know the fundamental analysis or the technical analysis. When you know that, then now you can now go into your risk management. It's very, very important. Your risk management is key. Because if you don't know how your money is being managed, then trust me, it's a matter of time you blow your account. It's just a matter of time. Right? Okay. For the guys that joined me on my my previous live streaming, which I did today, I had $15,530 something dollars. With this position size calculator, I was able to risk trading the $33, which was on top of the 15,500, because I don't want to close the week below 15,500. That was why I had to trade only with the $33 that 15,500. Let's imagine that I did not use, or I did not manage my risk properly. Let's imagine that for every trade that I execute, that I don't know how much I'm risking on that. It means that maybe by now I might be down below the 15,500. I don't know if I make sense, right? So that's why I will encourage everybody, for the guys that really, really, really wants to learn trading, to pay attention to what I'm saying. Trust me, you need to pay attention to what I'm saying. Then another thing you should also pay attention is yourself. A lot of people don't like hearing this. You need to pay attention to yourself, because one thing Forex is going to do, Forex will expose you to you. Trust me. If you have any trauma, you're depressed, you're feeling bad, you have low self-esteem, I know some people will be wondering, how does this correlate to what I'm saying? Trust me, Forex will bring them out to you. So if you're going to take a career in Forex, be ready to see yourself for who you are. I know I'm saying this. I know why I'm saying this. There are times when I execute trades, like I really wonder, is this me? Yeah. If you don't, I think there are things you just don't have, you just can't explain. You just let people to experience it. And I'll say it again. And for the ones that are interested, and the guy that is following me live here on this live streaming, if you want to be a trader, you want to be self-employed, you don't want to work for anybody, you want to be your own boss, you want to make your own money, and you want to do it through trading, whether Forex trading, crypto, or whatever. I'm saying it and I'm saying it again. Be ready to be exposed to who you are. That's when you will see the real you. If you're a greedy person, you will see it. If you're a coward, you will see it. If you're battling with depression, trust me, you will see it. You have any trauma that has been, manifesting in your life subconsciously without you knowing, don't worry, you will see it. It's crazy, but yeah, you will see it. Why am I saying this? The reason why I'm saying this is because when you are trading and you are the one analyzing the market, you are the one executing the market, you are the one doing everything. It is you against you. Yeah, it is you against you, because it's you making decisions by you, and at the same time getting critics by you. That's a very hard thing to do. It's easy for someone to criticize you, trust me. It's way easy, and you won't even feel it. Let's say someone is criticizing you now, and maybe that person is wrong, or that person might be right. You just brush it off. But when you criticizes you, it's a different ball game, trust me. It's a different ball game. So that's what I would say. If you want to be a trader, be prepared. You need to really work on yourself. You need to work on your mental health. You need to work on your spiritual health. And I'm not being religious here, trust me. I'm a pro religion. I think religion is tearing people apart. But at the same time, I think religion is good because it's what is where you build the foundation of your spiritual life. And people will argue spiritual life this, but trust me, there is a spiritual life. There is. Either ways you want to take it or leave it. There is. So there are some aspects of your life you really need to work on for you to, be profitable in Forex. And part of what you work on, you need to know who you are. You need to be self-aware of who you are as a person. Not what people are telling you. No, not what people are telling you, trust me. You need to be aware of who am I? And you have to be honest with yourself. So if you're greedy, accept the fact that you're greedy. Don't fight it. Everybody have their own deficiency. If you're proud, or you're someone that is proud, that has pride, accept it. Then work on it. Don't argue with it. Don't try to sugarcoat it and make it feel like it's everybody's problem. No, it's not everybody's problem. We are humans, but at the same time, we are different in our own unique ways. I know this sounds a little bit off, from the trading, but yeah. One thing is to know the technicals that is required for you to execute good trades. Another thing is for you to understand that there is a psychological part behind it. And if you are not able to handle all those aspects, trust me, you will not be profitable. Even if you are profitable, it will just be for a short time. In the long time, things will go south. And when things go south, then you will see that it's not all about having the technical analysis. If technical analysis is all you need to be profitable in Forex, then there is no need people doing Forex. It means everybody will be profitable. And in a situation whereby everybody is profitable in Forex, then nobody is winning. Somebody has to lose for you to win. That's life. Trust me. The money people make from Forex, somebody is losing money somewhere. It's a battlefield. It's a battlefield between the bulls and the bears. It's one thing you need to understand. It's a battlefield between the bulls and the bears. There are people that are, buying with the mindset or with their analysis that the market will go up, right? And there are people that are selling with the mindset that the market will go down. At the end of the day, one person will win in those two battles. It's either the bulls win or the bears win. So somebody has to lose for you to win. I think that's the way the universe is created. Energy is not I'm not going into physics, but yeah, if you know the physics, the science guys there, I think you figure it out. Energy is not created nor destroyed. It has to be transferred or something, right? Yeah. So that's life for everybody. So this is not me being religious. I said it first in my live streaming, and I'm going to say it again. If you are a Christian, hold on to Jesus Christ. Your Jesus Christ, hold on to him. Hold on to your God. If you're a Muslim, don't play with Allah. Hold on to Allah. Pray. Do the needful. If you're a Buddhist, I don't know. I know Buddhists, they have lots of gods, but let me not speak out of my ignorance. But I know they have their own thing going. Pray to your own God, right? And in addition to that, work on yourself. Work on yourself. You really need to work on yourself, because that's the only way to stay afloat. Life is not easy, but when you understand it, it becomes easy. If you judge life from the logical point of view, it's not easy. It's not fair. Some people think life is not fair. From where I am, I'm currently in West Africa, Nigeria to be precise. There is this saying that says, life no balance. But I choose to differ. Life is balance. How does life balances out itself? Everybody has a problem. Everybody. Do you think Elon Musk doesn't have a problem? Trust me. If you should have one-on-one conversation with him, and if he's honest enough to tell you, you will see he has a problem, in as much as he might be the richest man in the world. Everybody. So far you're a human, you're mortal, and you're in this planet Earth. Trust me, there will be challenges. There is challenges here and there. But you need to understand life. You need to understand yourself. You need to be aware of who you are. Because it's only when you're a better person that you can better someone else. You can't give what you don't have. Right? Imagine you trying to be a Forex trader when you don't even know the fundamental or technical analysis. So how do you now want to trade? You can't give what you don't have. And I don't know why I'm sounding like a preacher now. I'm a trader, guys. Disclaimer, let me put it out there again. What we do here on this channel is, trading and everything trading. But at the same time, I think this is part of it. And I'm saying all these things, and at the same time I'm talking to myself. It's one thing that I would still let you guys know. As I'm saying all this, I'm still talking to myself. So indirectly, I'm still advising myself. So as you guys can see, let's go back to what the market is doing. So we'll just give an update on that. And so if anybody is currently watching us live, please, if you love what we are doing here, the only way you can support us is not other than like the video, share with your friends that you feel like this content will be beneficial to them, and if you want to have future encounter, or you want to be part of the community, you can just hit the subscribe button and we'll be all good, right? Let's head back to what the market is doing. Let's get an update. So as you guys can see, we went up, we swiped out the liquidity at the top here, as you guys can see. Very nice. We took it out and we've started pulling back down. Why did I use pull back down? In as much as we are coming down with these red candles, you can see that we are not having any imbalance. There is no imbalance being created while we are coming down, which is good. If we should retrace back down to this order flow here without forming a new imbalance, it means there is high chances that they will tap into this area and move the market back up. There is high probability of that happening, right? Another thing we will watch out for is how the market delivery is being delivered as the market is coming down. So if the market is going to come straight down without forming internal high, something like this, let me get the part. So if the market is going to come pretty much straight down like this, that's nice. And when I mean straight down, if the market will not start creating an internal high or internal low, that would be nice, right? That would be nice. But in a situation whereby the market is coming down and it's creating imbalances just like the one it created while going up, then there is high chances that maybe they want to flip and start going down again. But judging from what the market did, first of all, we had this order flow here. The market broke out of this order flow that gave us more momentum to come back down. Also, if you check here, the market also broke out of this order flow here, which means the market is looking bullish at this point. Well, I wouldn't advise anybody to buy at this level. I myself will not buy at this level. The levels we might start looking for buys is if we take our Fibonacci tool and draw from here to the top here. According to ICT, sorry, I have an itchy throat. According to ICT,